the margins have gone up 4 basis points on the previous half. So that's got to be net positive.
So the net interest margins come in at 2.1%, and that's above consensus. Consensus stood at 2.01%, and we actually thought it would come in at 2.06%. So the net interest margin side has been a positive one. Having said that, some of the commentary was around that loan demand has been quite flat. Instead, what we've seen is repricing and the cost of funding really going down for Commonwealth Bank. So a good result in terms of the margins coming in at 2.1%. That was better than expected. In fact, this result on every metric better than expected. And remember, coming into this result, Commonwealth Bank was one of the most expensive, still is one of the most expensive banks in the world. But today, the result really proving that perhaps that premium is justified. Now, since the global financial crisis, Commonwealth Bank has been able to maintain a return on equity above its peers. Today, the return on equity at 18.1%. That compares to the likes of ANZ and Westpac at 15.5% and NAB, which is trailing at 14%. That cash profit, of course, better than expectations. The market expectations were at $3.7 billion. It's coming at $3.78 billion. And of course, it's that dividend that's really going to power along that share price today. We know that the banks have been doing well because of this high yield play, and that dividend coming in at 164 cents has absolutely blown expectations out of the water. That's actually up by 20% compared to the previous interim dividend. So a very strong result there. Its business units has been seeing a strong rebound. Of course, interest-bearing deposits have done extremely well, but wealth management is up by 10%. We've also seen a strong rebound in institutional markets and banking, and we've seen a strong performance by some of its other brands like ABS, which is the brand in New Zealand, as well as Bankwest. So a fantastic result from Commonwealth Bank and an all-time record high today.
You said the board has signed off on that one. Positive response on the shares. Julia, let's switch into CSL. The stock's up about 1.3%. Put this one into context.
Talking about all-time record highs, it's an all-time record high for CSL shares today. Now, these shares have been doing extremely well over the past year. The stock's up a massive 87%. So going into this result, there were high expectations, and CSL has managed to come in above those expectations. We have a look at the expectations in terms of profit. It was for $600 million US. It's actually come in at $627 million. So a very strong result coming through from CSL. They have reaffirmed 20% constant currency earnings growth for the full year. The dividend's been raised by 33%, coming in at 50 cents, and they've seen some very strong numbers coming through. Immunoglobulin products up by 10%. One of the interesting things here is that we've seen market share increase, and one of its competitors, Baxter, during the period actually closed down one of its LA plants for a refit, so that seemed to help the results there. But another interesting product is albumin. Now, this is a product that is used in the area of liver disease and to help the liver, and if we have a look at growth there, that was 8% excluding Asia. But once you include in Asia, we saw a massive jump of 27%. And I think this is one of the exciting things for CSL, that we are seeing markets like China are seeing very strong growth and opening up. In terms of research and development, we saw an increase of 14% there. And that's a positive because CSL has a strong history of investing in research and development. And this is really investing for future growth. It's got some interesting products in the pipeline, and that will ensure that the growth profile for CSL can continue. So a fantastic day for CSL today. That's really going to boost the healthcare space. It's the biggest stock in that sector. Of course, the healthcare space is going to be weighed down probably a little bit by ResMed, which trades ex-dividend, but this result coming in above expectations and CSL hitting an all-time record high should be positive for the sector.
Julia, that's great. Yeah, CSL shares at the moment up 1.1%. Maybe to you on this one as well, Julia, in the same space. Ansell, I suppose it's kind of in similar waters being in that space. The shares, we're just noticing, down by 6.1%. It's recovered a little bit from the 8% drop earlier. This one seemed to come in below expectations. Do you have a take on that one?
We have a look at Ansell. It's one of the worst performers out of the stocks that have reported today. Now, we were expecting to see a profit result of $65 million, and they've come in $10 million below that, about $55 million. Having said that, they've still come out to reaffirm the full-year earnings per share forecast. But in this type of market, it looks like the market's not too forgiving when the company does come out and miss expectations. Ansell, although in the past has been quite strong due to its gloves division, which does make up a large chunk of its earnings, but we know that Europe is quite weak at the moment, so that could be a potential downside. So Ansell coming in below expectations, one of the worst performers. I think it opened up actually down by around about that 9% mark, so it has improved, and we're seeing it falling about 6% at the moment.
Blood Plasma subsidiary, which is the most profitable arm of CSL, Peter has a lot of work to do. Interesting kind of, I suppose, passing of the baton comment, Julia.
An interesting comment. I guess just on Stockland, we have seen them come out and downgrade their full-year forecast, and that's the reason for the weakness in the shares. Some of their commercial units are doing relatively well, but the residential still remains very pressured, especially in markets like Queensland, as well as in Victoria, where we have seen some changes in the government assistance to the first home owners. So Stockland under pressure there. I think the actual result coming in pretty much in line with expectations, but the fact they've come out and cut their full-year forecast. In terms of CSL, I mean, the growth has been phenomenal, and if we have a look at this area, still growth of 10% is extremely strong. But I think some of their new products are becoming a lot more interesting, and the research and development pipeline is very important here for CSL because it does trade on a premium multiple, and the market is pricing in extra growth. But if we continue to see that strong growth flowing out of Asia, then that's going to be a massive positive for CSL, and I think it really has blown expectations out of the water today. I mean, the market consensus was $602 million. It's coming in at $627 million.